what advice do you have for people like just trying to dig out of debt?
Okay, don't be delusional.
Okay, well, elaborate.
And so don't be delusional in that every time I would want to pay down my debt, there were two things I would do. I would try to pay off the debt that had the lowest balance just so it could be paid off. Okay. Just to give myself like, I can breathe, something is gone.
Yeah.
That's not always the best scenario for us because it may not be the thing that has the highest minimum payment. It may not be the thing that has the highest credit interest, which means that you may have paid off that little Walmart credit card, but your PC MasterCard or your Visa is growing at a way higher rate.
Yeah.
So that's the first thing. The other thing is don't be delusional in that you got to give yourself some grace, right? Because sometimes we set these goals like I need to pay off my debt in the next year. Does it truly benefit you significantly to get it all paid off in 1 year? Yes, it's being debt free is great. Being debt free isn't always wise.
Welcome back to another episode of the Black is the New Rich podcast. Today we got a very special guest. It feels like I haven't been up here in a while because I haven't recorded. So I'm a little nervous today, but we got a very special guest. We're going to talk about finances and how we can get better at budgeting, how we can get better at saving and all that type of stuff. But I don't want to keep on talking. Can you introduce yourself, please?
Hey everybody. Oh my gosh. First off, I'm super excited to be here. Nice. Big ups to Black is the New Rich, doing big things for the community. My name is Eboni L, Eboni Ledford, whichever you prefer. And I'm a financial professional. I started in finance at the young age of 21, which has a whole story attached to it. But basically I was going broke.
Okay.
Living well beyond my means, well beyond my means. I had expensive taste. Mm-hmm. I really like traveling.
Yeah.
So you start to get a little bit of stuff, and then you're like, oh, let me get a little bit more. But then what happened was I couldn't afford it.
Yeah.
And so I was doing it all on credit card.
Oh, geez.
Right.
So you're maxing out your credit card.
So I'm getting there.
Okay.
And so I max out one credit card, and then I apply for another one. And they give me an $8,000 limit. I'm thinking to myself, at this point I'm 20 and I'm thinking, I'll pretend it's 2,000.
Yeah.
And then I'll never go over.
Yeah.
You can't pretend an 8,000.
Yeah,
you try to trick yourself.
You have that 6,000.
There. So I started spending on trips and everything, and it just hit me that if I hadn't learned how to make my money work, as a Jamaican with very strong pride, I couldn't start living my life a certain way and then have to claw it back because I couldn't afford it. Yeah. And so I went to learn how money worked, and then I realized that our community doesn't get easy access to the information that I learned in just 30 minutes. And so I said to myself, well, one, sis, you got to fix yourself.
Yeah.
But in fixing myself, I can also then go in and fix the community, like our money mindset, how we leverage money, the way we talk about money, just to have those open conversations as well, right? Also, growing up in a Jamaican household, what was ours was ours.
Yeah.
We didn't talk what your money, your family was doing with money, what my family, everything was very private. To this day.
Yeah, it's a little bit of an uncomfortable conversation. I don't think it should be, to be honest.
It shouldn't be. In fact, other communities are leveraging, tips. Here's what I did with my money. Here's a mistake I made and what I learned from. We wouldn't do that. And so I started in finance because I saw a huge gap, and I saw an opportunity to help the people that I love the most, that being our community, but also to help myself to build the life that I wanted.
Okay, amazing. So what was that, I would say, rock bottom point? What did that feel like, and what happened?
I think for me, the rock bottom point was that I could sustain that lifestyle. I could continue to sustain that lifestyle for quite a bit of time, right?
Okay.
I would get paid.
Were you working at that time?
I was working. Okay. And actually I made quite good money. I was always getting raises.
What were you doing?
At that time, I was working at a coach outlet, but also working summertime with the government, the Region of Peel.
Okay, nice.
So you can imagine, the money was nice.
Yeah.
And
at 21.
Yeah, exactly. And so I was saving, but oftentimes you would save and then I would spend it. And so my rock bottom was kind of the point where I realized I hated working in retail. Okay. I got to this point in my work where I'd walk through the door and my body would go, I can't find a way to explain it except for saying I walk in and my mood is just salt. I don't want anybody to talk to me. It wasn't enjoyable, and so my body developed this negative allergic reaction to going in. And so I realized also that in my life I don't want to have to work a job I don't like because I need the money.
Absolutely.
So what I did preemptively, this could have been reckless, which it is, but I started calling in sick for all my shifts.
Really?
Yeah, I just started calling in sick.
Yeah.
And so what would happen because of this is when I could tolerate to go in,
Yeah.
I would make like maybe $600 biweekly. I had my car, I had my insurance, I had everything.
You just had enough.
I just had enough. And so I started going harder in my business, but at the same time, this is a mistake I see a lot of entrepreneurs making, is that we haven't developed a strong foundation, but you feel like you can just go get it.
Yeah,
so I'm like, okay, forget it. I'm just
quit
gonna
too early.
Yeah. And so I quit early. And that was the point that I just realized I don't want to live paycheck to paycheck.
Yes.
I'm having a midlife crisis and I'm only 20 years old. I need better for myself. And I want to maintain this lifestyle. I don't want to, the thought of kids purchasing properties, it all threatened the lifestyle that I wanted.
Yeah.
And my lifestyle also threatened my ability to build the life that I wanted with a family and all of that stuff. And so it was kind of being in that position where my mind would be like, you have to choose. And I would say, what if I don't want to? And so that was my...
I don't want to? Elaborate on that.
Okay. Did you know that the Black Dollar leaves the community within 6 minutes? That's why we are excited to introduce the new Black is the New Rich app, designed for the Black community to be more intentional about where we spend our dollar. The directory consists of mostly financial services like real estate agents, financial advisors, tax consultants, mortgage agents, videographers, photographers, and many more. With our app, you can easily find and connect with quality services that are owned by Black entrepreneurs. And to ensure the integrity of the service on our app, all directory members are held accountable if they receive multiple bad reviews. Our mission is to circulate the dollar and provide quality services to our community. Download the Black is the New Rich app today and start investing in your community.
Okay, so I feel like, when we're younger, everybody's like, live your life now. People still say that to this day. Like, we'll travel and they'll be like, well, you guys got to do it while you're young. The other day I said to my mom thinks this is absolutely unacceptable, but my mother-in-law will accept it. I said, we're not going to just travel now.
Yeah.
We're going to travel like this forever. And when we have our first child,
yeah,
we're going to pay for you to travel with us so you can watch our child and we can continue living.
Yeah, lit.
And so that's what I mean with, I don't want to choose. What if I don't want to?
Yeah.
I want to live my best life and do the responsible things. I want to be able to stretch my vision. Like, there were things, I remember the first time I told my dad I'm going to Bahamas. My first vacation, by the way, was Niagara Falls.
Oh, wow.
That was my first vacation.
Yeah.
The second vacation was New York. And after that, I was like, Dad, I'm going to Bahamas. He was like, we'll get there when we get there. Parents, when they're like, keep dreaming, kid.
Sure.
And we went to Bahamas that year, Jamaica by ourselves, and somewhere else, Cozumel, Mexico. And every year after that, the trip was bigger. My life, every year, I want it to be bigger in a new way, in a way that feels like people have to just watch just to catch some of that bigness. And I know bigness is not a word, but that's how big it is. What if I don't want to choose? I don't want to have to pick between being responsible.
You don't want to sacrifice your lifestyle.
Exactly.
Because of money.
Exactly.
Okay. So now we were talking off camera and you were saying that you want to take 4 trips a year. And so how do you feel about that now in comparison to 21 years old? Because I know you were traveling a lot.
Yeah.
So is that a dumb down or is that okay?
For me, before COVID, I had gotten up to 5 trips a year.
Okay.
All of different veracities. Like, when we went to South Africa, we went for 14 days, and that was first of all,
jeez, that's
Black is the New Rich. If you have not been to Africa yet, you have to go.
Okay. I have.
Everybody has to go. I touched down and I was like, holy, my spirit was just jumping. It was crazy how you just land and you're like, whoa. And I wouldn't even say I was in the right place because I was in South Africa, which
it's a little different.
It's very different. And there's a lot of segregation, but that's a whole other conversation. But being able to travel like that at that age was great. So 4 trips a year means that I'm able to enrich my lifestyle. Basically, it's a break each quarter.
Okay.
Some trips, like this year, I just came back from Mexico. We're going to Rome.
Nice.
We have Dubai booked.
Jeez.
And then I'm going to Vegas.
Okay.
Right? And so I might try to convince hubby, please. And we can going to Ghana. But the thing is, we want to travel at least 4 times a year because it gives me a mental break. Yeah. Compared to my 21-year-old self, this is a level up. Because at that time, I was traveling a lot, but it was really one big trip a year. And whatever else I could do, there was no staycations. It was kind of you just go.
Yeah.
So this would be huge.
Okay.
This would be huge for little me.
Okay, dope. So these days we're in a economic turmoil, right? The economy is going crazy right now. A lot of people are losing money in their investments, and I want to talk to you about finances. And I want to start at budgeting, right? Because we've all heard budgeting for so long, but not a lot of us know how to do it and what to look out for. Can you please give me some tips on budgeting and where to start?
Okay. So the first PSA is that most people struggle with budgeting because we don't want to appear frugal, and therefore we don't want to be frugal.
Okay.
Right?
Okay.
Like there is this notion of I don't want to be cheap. So I'm not going to cheap out.
Yeah.
And therefore we continue to live and we're overspending whether we want to admit it or not.
Okay.
And so young me, 21, always overspending.
Okay.
Right? And therefore every time you get paid, you're playing catch up. Right? So it's kind of like
you're spending before you got it.
Exactly.
Okay.
So think of a payday loan. The cycle of a payday loan is I got to borrow for this week.
Okay.
But when I get paid next week, I got to take money from my paycheck to pay that back, which means I probably need to get another payday loan. In our budget, overspending does the same thing. We're constantly playing catch up. And so the first thing, it's so easy, it's simple, but you have to create a budget, because if we don't know what's coming in compared to what's going out, it's hard for us to maintain or even set goals.
Okay.
And so some things to look out for is subscriptions. I find that one of the biggest things right now.
I heard that a lot.
Subscriptions.
People, because I heard they eat money.
Yeah. Have you ever? I signed up for JustFab. The ladies know. I signed up for JustFab. It cost $39.95 a month US, so $50-something.
Yeah.
I signed up with the intention to skip each month.
Yeah.
There were a lot of months I forgot to skip.
Okay.
And I didn't need shoes. So as a result, you may think, okay, well, $50 is small. And this was my problem.
Yeah.
$50 here, $20 here, $100 there. It doesn't add up to anything.
Yeah.
But it does.
Yeah.
Because you were probably counting on that $50 to make $250 for your investment.
Ooh, see, that's where it comes into play.
Right.
Okay.
Right. So we have to be weary of subscriptions. If you've subscribed to something because it's free and then it's going to take your money out, you got to set a calendar reminder.
Apps.
Exactly.
Yeah.
Debt repayment is also a killer, because minimum payments, you might think my minimum payment is $25 today, right? Since this economic change, interest rates have been going up and most people don't even realize. They're kind of like, oh, now it's not $17, it's $30, but that's okay. A lot of people spend a quarter at least of their income on debt repayment.
Jeez.
And then we're still playing catch up because we have to repay the debt that we owe plus interest.
Yeah.
Then we likely need to use it again to keep up with our lifestyle.
Yeah.
And so lifestyle creep, what are you spending on? And I'm not the regular financial professional that says, oh, I always make this joke, no bully beef, no craft dinner, no nothing. People will say you have to make big sacrifices, and it's true. You can stop buying coffee every single day as one step. But at the same time, the biggest way to improve your budget really is just acknowledging, where can I delay gratification?
Okay.
If it's not everywhere.
What do you mean by that?
Okay. So my trips.
Yeah.
There were trips that I could not afford to take when I was 21.
Yeah.
I could not delay my gratification there. And when I say I could not, I mentally could not, but I really could have said, let me just wait a couple of months.
True.
Right? And so oftentimes we're trying to get everything now. Let me start this business. Oh, let me get a new car. Let me do this. What can I wait on? What is my main priority for this quarter, for this year?
Okay.
Before we started this podcast, I was saying to you, I wanted to buy a boat and 2 properties in one setting.
Yeah.
And you can't do that.
Okay.
Right? Because I have to delay gratification. Obviously, the boat comes second.
Yeah.
Right? And so I'll get a boat in the next couple of years,
Yeah.
but I'm okay with delaying gratification so that I'm not hemorrhaging cash.
Yeah.
Right? And so budgeting is just about, how can I delay some gratification, still building a life that I deserve, because you deserve to treat yourself in some ways. How can I ensure I'm spending less than I earn, and keeping a net for savings, all types of savings as well.
Okay, because I personally, I've heard people say, oh, cut back this, or cut your lifestyle, but I don't really believe in that totally. I want to live my life. I don't want to just be super frugal and not be able to live my life, right? And that's what you're saying.
Absolutely. In fact, going into debt was the best decision I ever made. It changed my life. I was going to school for law.
Yeah.
life would have been very different had I not started to treat myself that way, because we grew up learning, and it's not from our households per se, but there's constant messages, especially to the Black community, that we only live mediocre lives.
Yes.
Right? And
Yes.
that life is really only about working and just getting by. There's always this notion of just getting by. And I don't believe in that.
Yeah.
And so had I not gone into debt and tasted the, I'm like, hold on, people living like that. No. So had I not done that, I wouldn't be going as hard as I am right now, perhaps.
Okay.
And maybe by the time that I realized there's another life out there, I'd already be sitting in debt. I would have, just kind of be so used to getting by that it would cause different lifestyle creeps at a later time in life that could affect retirement.
Absolutely.
So I think that it's conditional response, right? When you have a cat, I have a kitten, and when he's doing something bad, I spray him with water. He likes water, so this example does not go for him. But in most cases, you spray with water, and that lets them know this is a bad thing.
Yeah.
But if you're constantly spraying them with water, even for doing things like eating, drinking, they get used to it, and they're like, okay, I'm not supposed to do anything.
Yeah.
So if you're working for your money and you never have a break, you never have a moment to enjoy your life and the money that you're making, you never have the conditional response to actually do something with it to enhance your life in other ways.
Makes sense. Jeez, that's okay. Dope. So when it comes to saving now, okay, emergency fund savings, different types of savings accounts, how do we go about that?
Okay.
Actually, wait, before you answer the question, because here's one thing. I heard something the other day, and a guy was saying, you should probably start investing when you have 6 months of like your emergency fund set up. And to be honest, I wish I took that advice prior, because especially with this economic downturn, like I have so much investments that are taking a beating right now.
Yeah.
And I didn't do it that way. I kind of just said, you know what, I have a chunk of change, I'm gonna invest it all. So what do you have to say about that?
Okay, so there's a dichotomy of ebonies. Pre economic correction,
Yes.
I would say you're getting in, and you're still saving in an emergency fund, but perhaps you're prioritizing one over the other, because everybody can do all things. That's another thing we have to get into. There's no excuses. You can save $10 a month if you have to for an emergency fund.
Okay.
But you need to put some money aside. So I would say that I believed in doing both. As a really high risk investor myself, not for all my clients. So my clients all have different portfolios. Some of them were more focused on cash and emergency funds. Some of them were more focused on investments. Some doing both. For myself, though, I always felt it complicated to save cash, because I'm like, cash, and like my investments are doing pretty nice. And so I now force myself to save cash.
Okay.
And the reason for that is, like you mentioned, without an emergency fund, you don't have options. An investment is not for now. There are day traders that are going to make the money today, tomorrow. But if you're not a day trader and you don't have that type of capital, we're playing the long game.
Yes.
Right? Medium to long game.
That's why I invested. I'm playing the long game.
Exactly. And so the thing is, in a time like now, let's forget the economy. Let's like put it onto ourselves. Remember that example I gave? I hated my job so much I couldn't even go in.
Yes.
A lot of people are kind of in that boat where they're like, I would like to maybe travel Europe for the year or whatever. I just don't want to work where I work, so I want to give myself options. If you make that decision and you have to pull out of your investments, you bite yourself twice. Right? If you make that decision, your investments are chilling and you've got cash, you only bite yourself once and the bite doesn't last that long.
Fair.
Right? And so an emergency fund gives you options from an employer. It gives you options for emergencies like now, but it ensures that you don't have to actually take out of your long-term
And you don't have
wealth.
to panic.
Exactly.
Okay, because even I just I put it up. I posted it the other day, and it was 45% of Canadians have to go into their RRSPs and their savings basically to like live.
Yeah.
And that's kind of 45% is an alarming number.
Yeah. Absolutely. Well, let's think about the fact that more than 50% of Canadians are almost living paycheck to paycheck.
Jeez, yeah, someone commented that.
Yeah.
That's bad.
Yeah.
So then, during this time, like, how can we counteract that?
This is a good question, and it's tough because the bleeding has already started.
Yes.
Right? And so the best thing that you can do right now is prepare yourself so that in another situation like now, you never feel the way that you do, unless you love the way that you feel.
Okay, so basically, are you saying like, okay, we're already going through it. We're probably every so often we go through these type of times.
Exactly.
So prepare for the next time.
Prepare for the next time.
And just try to get by this one.
And try to get by this one. Because for some people, I'm still saying save.
Yeah.
Still save, still do your thing, cut your expenses as much as you can.
Yeah.
Delay some gratification, continue to live your life, because the thing is, I was reading this book while I was on vacation, and the psychology of money, because I've been at it, but it's so good. Yeah. And the problem is oftentimes we're so focused on the right now.
Yeah.
Right? We're focused on the right now. We are already going through an economic time where we're like, I don't know what to do, but I can get by. Mm-hmm. And so we're trying to fix right now.
Yeah.
But the problem is, if we're already in it, you still save your money. Yeah. You still try your best. Investments aren't going to help you right now.
Yeah,
and you don't want to take out from them unless you have to.
Yeah.
So give yourself some grace. Get through this, with the skin of your teeth come out, it's okay. And prepare for the next time, right? Because I remember I went to this event and somebody said every 7 to 11 years there's an economic correction.
Yes, exactly.
And yes, we can't count on it to happen exactly when it happened last.
Around that time.
Yeah, but it usually has some COVID, swine flu, bird flu is back in Brampton. Come on. Like something always happens, right? Yeah. And so he said that the first time, 2000s, he didn't have any money, he was broke.
Jeez.
And so then he said, okay, by the next time 2008 came, he had some money, so he invested it, but it didn't do what he wanted it to do.
Okay.
And that was the point that he vowed, every 7 to 11 years, I'm finna have it.
Okay.
And so when COVID came, I was like, oh gosh, this guy's laughing right now. And then when this correction came, because the thing is, we were already in a recession in COVID that nobody spoke about because we were already going through mass hysteria of other sorts.
Yeah.
Right? And now they're putting us through mass hysteria of this, and it makes me question, because this is Black is the New Rich. We have to talk. We have to talk real, right? So I'm 100%. A very real person. There's always an agenda. Whatever the news is pushing constantly, you have to ask why. Yeah. Is there something like? Is it because they just want us to know? No, because there's other things that we're supposed to know that we don't.
Yeah, exactly.
And so whenever we see this constant trend, oh my gosh, this can be terrible, and we're focusing on the negatives, and we're convincing ourselves that everything is negative when there's opportunity here.
I was just about to say, like, if you have cash, if you have it, I feel like this is a great time to invest. Can you talk about that?
Absolutely. So, I love shoes. Okay. I love shoes just like I like food, but I don't buy food that necessarily goes on sale. So shoes, right? If I go in and let's say Yeezys have like a big sale for some reason. You go in and you buy as much as possible. Okay. You buy some for your friends. You buy some for you're like, even forget my friends, forget my family. I'm just trying to hold whatever I can hold to get out of here. Yeah. This is a massive shoe sale. Right? Because the thing is, when we look at our money, when you go to the bank, they say, Corey, are you okay with losing money? Most people are going to say no. Yeah. Because that's common sense. Nobody actually wants to lose money. Yeah. Even if we're comfortable with it, we don't wake up like, I want to lose money today. Yeah. So the problem is, when it comes to investing, we're thinking about the money. We're thinking about what we put in. We're not thinking about what units.
Okay. What do you mean by that?
Units. Every time you buy a stock, you're buying a unit, right? Yeah. 1, 2, 3. Yeah. And so when we put in money, if I own 10 units of something, I'm thinking, well, my money's dropped, but I still own 10 units. Yeah. And so unless I've sold, I haven't actually lost anything.
Exactly.
Okay, so in a shoe sale, you're able to buy more shoes when the price is low. Yeah. Right? And yes, this is the example I use. When you buy something and you bought it full price and you go back to the store, you're like, darn, I can't return it. And I lost. Yeah. And you just buy more shoes. Yeah. Right? Yeah. And so this is the same example. You already bought before the price was down. So there's some adjustments in your portfolio and your market value. Yeah. But there's an opportunity to buy way more shoes, way more units. And when the market corrects, so long as you're making decent investments, common sense, you know, it's going to go back up. You have all these shoes, all these units, and the value goes up. Right? So when we think about our favorite name brands, when we think of, like, I'm going to use a Black owned because duh. When we think of somebody like Telfar, the bags are hot and they sell out. And chances are you won't get them on sale. But if you do, it's a steal. Yeah. And you hold all those and the value keeps going up because nobody else can get them. True. And so having it in my closet, I'm growing value. Yeah. Just like a Louis Vuitton, having it in my closet, I'm growing value. Yeah. Having stocks in your closet, being able to buy them cheap, you're growing value.
Okay. Are you big into stocks as well?
I call myself a lazy investor.
Elaborate.
All right. So in investing, you have a couple of different personalities, right?
Okay.
You got the day trader. I used to love day trading.
Whoa, I won't even touch that.
You know what? It has so much potential for return.
Yeah.
The thing is, to be a day trader, you need time.
Okay.
First off, you go to the bathroom, you make a bagel.
Yeah.
That's it. You just missed your opportunity for the day on something potentially. So you always have to be at this computer. And then the other thing is you need capital. Because you can't just buy 10 units of something and expect to make 100% return. You need to have the capital to go all in and pull out to make those big margins, right?
True.
Most Canadians don't have that capital.
Yeah.
Most Canadians don't have that time.
Yeah.
A lazy investor, and so I am partially that type of investor, more for the long haul, right? So like I like cryptocurrency. I have singular stocks. I do all of that great stuff. I kind of look at balance sheets to figure out what I like.
Yeah.
But the majority of my investing is funds, lazy, right? Because it has a bunch of different companies, stocks, bonds, everything is in that portfolio.
Yeah.
I invest in the portfolio. I'm paying somebody to trade my money for me. And then I just leave it there. Right. And so I have a very diversified portfolio of different funds. Is
there anyone that you can say?
Yeah. So my favorite is I'm heavily invested in segregated funds because there's a guarantee on them.
What's a segregated fund?
Okay. So a mutual fund is kind of like a segregated fund's sister. Right? In that it's a fund that's actively managed, right? They've got teams actively managing them, correcting things, taking things out.
They pull things out and put things in.
Exactly, right? And so they're mitigating your risk for you. Because of that, a mutual fund has fees, right?
Yes.
Generally fees that everybody's trying to run away from.
Yeah.
A segregated fund is cloned, so control V that, right? And basically the only difference is that it's sold by an insurance company. And so it has guarantees. So now
there's guarantees to your segregated fund.
Yeah. So if you wait until maturity, let's say maturity is 15 years.
Yes.
They guarantee at least 75% of what you put in.
75%?
Yeah. Assuming that the market is below the value, right?
Yeah.
If you put in a lump sum of cash, they guarantee 100% of what you put in. Now, for those guarantees, the fees are higher, but there's a guarantee. Right? And so you also have index funds, right? Which used to be more like algorithms, right? But positive algorithms. And so there's a lot of time for them to correct themselves and they tend to make you a lot of money. In the present, they don't always make you a huge return, but the fees are lower. Now we have ETFs.
Yes.
Very similar, right? And so we have all these different options. Some funds that I love that are offered as mutual funds and seg funds are dynamic.
Let's break that down.
Okay, so Dynamic is basically an investment firm, and they create all these different portfoliows. They've got a bunch of different portfolios. I love the US one because, so here's the hack on investing. Investments are not driven by common sense. They're driven by emotions. And so when we think about things, I can tell you how my US investments are going to perform because there's a US election coming up, which means that whatever we're going through now, even if it's fixed, my belief is that it's still not going to be properly fixed because we have to wait until we're on the other side of the election. And this happens every time there's a US election. Either things are getting really inflated up until the point and then they crash and then they come back up. But this is something that I can expect because I can expect Americans and other people to be, looking forward to different things throughout this election. Different, when we had Trump, I'm not big in politics, but Trump would do things where if you were a gifted investor, you'd be like, great day, Trump, great day. Because he would say things and then you'd be like, this is an opportunity, but it's only if you realized it was an opportunity. And so it's driven purely by human emotion. The next is Dynamic also introduced a real estate fund. Some of our favorite developers are in those funds. So if you're somebody who, I'm really big, again, dichotomy, Eboni, I'm huge on property ownership. I also acknowledge the situations in which I'd rather rent. Right? And so if you're somebody who's like, I kind of like my life, I don't really want to be a landlord, I don't really want to own. You can just invest in REITs, in different types of land.
I learned that at the EYL event the other day.
Yes.
They gave a bunch of different REITs, Canadian ones to invest in. Are you invested in any?
Yes.
Can you say?
US. And so I'm invested in a real estate portfolio and I can't remember right now exactly what makes it up. but I'm going to make sure I send you the list because there's
please.
a bunch of
I'll put it in the description.
different developers, including like storage companies, for example, that own, they have trucks. So, they have trucks, but you didn't realize that they own so much land for storage.
Oh, true.
And so there's, again, a big diversity of different types of properties that I'm investing in.
Yeah.
While still going towards actual property ownership, being a landlord, but this gives people an opportunity to just get in.
Get in. Okay. Geez, that's a lot of investment tips at once. Dope. So let's talk about credit. I've heard so many different credit rules, right? And first of all, how are you using credit right now?
Okay. So, hold on. Okay, so how am I using credit right now? So, credit and I were not friends.
Really?
We are friends now.
Yeah,
but in the past, we were not friends.
Okay, fair.
Because the truth is, I would always tell myself, I'm going to use this, I'm going to pay it back. Or, you give yourself an option like, why would I buy this in cash if I can buy this on credit and I'm going to pay it back? And then you don't pay it back.
True.
And so one opportunity is, before I get into how I use it, is being realistic with how people use it, right?
Okay.
How are our viewers using it? Are you being honest with your credit? Are you using it for your life expenses, the things that you should be paying for in cash?
Yeah.
Are you using it because you feel like it's bridging the gap for when you can't afford something, you're just tapping it? So right now I'm more into leveraging.
Okay.
Right. And so for the past, actually for all of this year, everything I want has been cash.
Really?
Yeah, everything I want.
Why did you make that decision?
Because to be honest with you, I know myself, and I know when it comes to leveraging debt, because of how my mind works, I might leverage debt and take that cash and be like, I'm going to invest that here. And as we're in a changing economy, it can still work. But normally what I say is the rule, if you're going to be leveraging debt, is that your investment is growing at a rate higher than your debts.
Okay.
Right now, you show me somebody whose investment is growing higher than their debt.
Yeah.
Interest rates keep going up. Yeah. And therefore, I don't want to put myself into an overextended leveraged position where I'm kind of like, now minimum payments are so expensive, my investments aren't popping off the way I want. And of course, active income is coming in, but that's not what I want to use it for.
Yeah.
And so training myself to just use cash. And when I'm ready, I'll use debt for different things, like my car.
Yeah.
I'm financing.
Yeah.
Absolutely. Because at the time that I bought it, interest was 1%.
Yeah.
Right? So why would it cost me $1,000 to have the car? Why would I pay for that in cash?
Yeah, exactly.
Right? Mortgage, I've got a mortgage. I also have a line of credit. Yeah. And sometimes I'll use this for a couple of different things. Line of credit, I might use it for investing, not right now.
Okay.
But if the interest rates were better, I would use it for investing potentially, right? And actually there's an opportunity for a lot of people to do that, TFSA, RRSP loans. But when you're leveraging, you just need to make sure that you're calculating how much does it cost for me to leverage this? And what's the timeline it would take for me to make this back and then some.
True. So even just a simple rule of thumb, like just for people using credit, right? I've heard different credit utilization percentages.
Yes.
I've heard 30%.
Yeah.
What is it? What do you believe in?
I would say 30% is ideal.
Sorry, before even that, can you explain to people what that even is?
Okay, perfect. So there's two key metrics, right? Credit utilization is if you've got $30,000 in credit total, so from credit cards, lines of credit, student loan, how much are you using of that? What's your balance owing? And so I remember the first time I went to get a student loan to buy a car. That's another.
Oh, jeez.
That's another story.
Yeah.
But I went to buy a car, and she was basically saying, at that time I was 20, and she was saying like, "Hey, your credit utilization, because you have revolving credit cards, is high." Right? Because my credit card at that time was $1,000 limit. Remember, I was a big spender. So my credit card, even though I was paying it off, it was always right at about that $1,000 mark, right?
Yeah.
So if you're always sitting at the top end of your credit, you're a high revolving user.
That means they think that it's funding your life.
Exactly.
Okay, makes sense.
And when you're going into other things, like big shout out to Royston, because I was just talking to Royston about this the other day. Let's say you're going for a mortgage.
Yeah.
Right? They're going to say, well, hold on. can you even afford this? Like, how are you going to pay for it? Right. And so you want to keep that down because it shows lenders that you're a responsible user. It also keeps your credit score at a very healthy rate. And it protects yourself. Because if you're always at the top end of your credit utilization, it means you're always almost maxed out.
And you're all relying on it all the time.
Exactly. And when it comes to paying it, you have very little wiggle room. And people in that space, oftentimes it's like, okay, I'm maxed out, so I'm going to get another credit card. I'm maxed out, so I can't do anything until I can afford to pay it down. And then there's the other option that I highly do not recommend, but I'm maxed out, so I'm just not going to pay it at all. I'll just wait the 7 years until it drops off. Right? And so these are things that impact our credit and impact our ability to do things like leverage debt for investing. The other thing is debt to earned income ratio, right? If you make $100,000 a year and your debt is sitting at $80,000, well, the first thing a bank is going to say is, you can't afford to pay me back. Right? I don't even know how you're living. So you want to make sure your debt to earned income ratio is also down. This gives you options. I believe in debt, like life insurance, can be a hack. Right? In that it's somebody else's, right? It's somebody else's money. And it's not your own. It gives you options if you use it responsibly. But if you play yourself and you tell yourself that that's just free money, it puts us in an odd situation. Oftentimes a situation that it costs us a lot of time to pay it back. There's a lot of people whose credit right now, it's like they wish it could have been better. But it can't because things are so tight. They can't afford. Actually, in that same book, right? Are you planning to fail? And planning to fail in that we understand that everything doesn't go according to plan.
100%.
So if you're making this income right now and you're okay with your debt to earned income ratio being 80%, sure. Have you planned for the unexpected?
Exactly.
The chance that maybe you're going to have to miss 2 paychecks. The chance that you decide you want to quit your job. How do you then continue to maintain that credit and ensure, because the creditors are not your friends. They're your friends when you have money. When you have no money,
they're on your
they're
ass.
on you. Right. So just making sure that when you're using your debt, again, low debt to earned income ratio, low utilization. Now, can everybody stay at 30%? Am I at 30% right now? No. But you just want to make sure
it's close.
It's close.
Fair. And for the people that right now, I was even talking to a guy at the gym and he was just talking to me about his debts. And a lot of people are trying to dig out of debt. Right? It could be very difficult to do right now, to make money and to dig out of debt and to just fund your lifestyle. What advice do you have for people like just trying to dig out of debt?
Don't be delusional.
Well, elaborate.
And so don't be delusional in that every time I would want to pay down my debt, there were 2 things I would do. I would try to pay off the debt that had the lowest balance just so it could be paid off. Just to give myself I can breathe, something is gone. That's not always the best scenario for us because it may not be the thing that has the highest minimum payment. It may not be the thing that has the highest credit interest, which means that you may have paid off that little Walmart credit card, but your PC MasterCard or your Visa is growing at a way higher rate. So that's the first thing. The other thing is, don't be delusional in that you got to give yourself some grace, right? Because sometimes we set these goals like, I need to pay off my debt in the next year. Does it truly benefit you significantly to get it all paid off in 1 year? Yes, it's being debt free is great. Being debt free isn't always wise.
Explain that. Elaborate on that.
So again, back to leveraging. If you have all this cash, let's say a house, right? I'm going to sell you the perfect house and you have the cash to pay for it. You could pay for it in cash. That's a choice, right? Because maybe for you, you're like, I have enough cash where I'm not going to miss it. Or you can take a mortgage with a low interest rate. You invest that money. Maybe you start a business. You develop your app. Right? You do all of this great stuff and you're making money off of the money you could have sunk into your house.
True.
And so giving yourself grace and ensuring that, I don't want to be debt free because I think I should. I feel like in finances, especially in our community, it is a problem with our community, I'm going to say that, is that we go along and it's kind of like we're living our best financial lives through the lens of other people.
Exactly.
Right? Because we're just trying to figure out, well, if that worked for you and this is working for the Jewish community and this is, I'm just going to do that.
And
sometimes people are just playing at a different level. They're playing a different game.
100%.
And so if you don't know how to play that game, or that's not the game that you should be playing, oftentimes it leaves us behind. So debt-free is a game for some people.
Yes.
Debt-free is for somebody who doesn't have a good relationship with credit. They know themselves and they're like old Ebony, like, I'm gonna hold off on that, right? But if you can train yourself on how to use it wisely, debt-free is not the best option.
Okay. Can you give us some more examples how people can use debt to their benefit?
Yeah, for sure. Okay, so starting a business.
Yes.
Right? Starting a business is a great way to use debt. And we know most businesses do it. Another challenge I see is a lot of entrepreneurs, we're playing too small, right? So we start a business and we're like, okay, I invested 500, I invested, 1,000, and then something comes out where it's like, maybe it's $2,500 for a great training. And you're like, nah, it's too much to invest, right? A business owner, when you think of Walmart, when you think of some of the biggest banks like Chase, those are people that said, yeah, we finna run it up and we're going to build this business and we're going to start building it from the blocks and then all the way up.
Yeah.
If we start small and we're not investing in our business, giving ourselves enough time. So maybe you do need to take some time off of work to develop whatever you have.
True.
Right? Maybe you need to invest in going back to school, online courses.
Yeah.
Maybe you need to invest in a new car.
Yeah.
Right? Like if you're driving Uber, to be honest with you, I'm not getting into a 1970 Honda. That's red flag. So you may need to invest in things like that. Another thing is actually investing, right? For people, oftentimes I work with people who say, I don't make enough and therefore I have no extra cash flow. 9 out of 10 times we find cash flow because there's usually something there that we can use. In the event that you're the one-off and you're like, I have no cash flow, leverage it.
Yeah.
Right? Go out and get a low interest loan, go get an investment loan, invest it, and build your long-term wealth.
Yeah.
Cars we talked about, mortgages we talked about. And so basically anything that could make you money that you don't have the money for right now, that's good debt.
And the debt that you get into that doesn't make you money, that's bad debt.
Exactly.
You want to stay away from that.
My relationship with debt is this. If you know yourself, there is no good or bad. Because if I go to the Gucci store and I want to buy myself a Gucci belt, it's the same question. Why do I want to pay for it in cash if I can pay for it on a credit card? Right? If the interest rate makes sense. If my interest rate is 20% and now I'm paying 20% more on the belt, just pay for it in cash.
Yeah, fair.
But let's say, for example, I pull this from my line of credit and it's 5%. 5% is worth it and I'll invest the cash for the belt.
Yeah.
Right? So finding ways to make our money work for us through wise decisions, always calculating which has the highest interest rate.
Okay.
Is it how I'm going to use the cash or is it the debt? And if it's the debt, that's bad and we stay away from it.
Okay. Jeez. Okay. So I want to talk about streams of income. And I've heard a lot of times people say one stream of income is close to none. Yeah. Right. And I feel like these days people either have to like consider side hustles or just different things to earn more money. What do you have to say about that?
I have 9 streams of income right now.
9?
9.
Can we go through them?
Yeah.
Okay, let's go through them.
So I have a couple of different businesses, or my business forks off into different areas, right?
Okay,
and so I get paid passively and actively as well. Okay. So I'm cheating because those are different streams of income.
Okay.
So actively, when I work with a client, I get paid.
Okay.
I get override from my brokerage.
Okay.
I also get residuals from investments.
Okay.
Residuals from insurance.
Okay.
Right? Because think about it this way. If you're constantly doing something, I make trails on the investment. So in helping you do well on your investments, I get a kick.
Okay.
And in insurance, as long as somebody's renewing, I get a kick.
Okay.
That's 4. I also have a 9 to 5.
Oh, really?
Yes, I
do.
You do? I'm a manager in tech. So we do renewals for... to make it easy, it's kind of like, when you go to a McDonald's and you use that big tablet. It is a tablet, but it's locked, so it doesn't look like a tablet. Okay. And so I work for a company that sells mobile device management.
Oh, amazing.
And I lead a team, right? Geez. And so it's pretty cool because I love sales, I guess. Yeah. Now I can admit it. And so I make money through that. I do public speaking.
Okay.
I do influencing.
Yeah.
I also have investment income. That's 8. And then my last one, and I always knock on this one, investment income. Jeez, I don't know what the last one is. I can't remember what the last one is right now, but we'll call it 8. We'll call it 8.
So I wasn't even planning to ask this, but how do you find time for everything?
God. Honestly, time management. Like, you
Okay.
just have to, I use an army, like a military agenda.
Yeah.
Every second is budgeted.
Counted. Okay.
Yeah.
Jeez.
And so I do that so that I can navigate. Otherwise, I get really frustrated when something doesn't go my way.
Yeah.
You know, sometimes you're doing a bunch of different things and you're like, you can't get anything done. So it's about being really diligent, setting up like weekends. I
Yes.
have my block times,
Yeah.
but I might have something or a time where I batch things, right?
Okay.
Like, especially content, captions,
True.
plans for the week, all of that stuff gets batched and my
Okay.
week starts early.
Yeah.
So I kind of just leverage doing that, but the majority of my income, number 9 bonus. The majority of my income, it's half and half active, half passive.
Okay.
Right. And so there are some things that I don't have to do much for.
True,
Right.
true.
And so if I was doing 9 active streams of income,
that's too much.
I'd be here, run down. I
Yeah.
couldn't even make it here.
Yeah.
I'd have to call and say, right. But if you can leverage, I always say this at New Year's, we always clink each other's glass and we're skinning tea and we're like,
Yeah.
Happy New Year.
Yeah.
Everybody who doesn't make residual income starts the new year at $0. So imagine this: we're clinking at nothing. Woo!
Yeah.
0. Residual income, we clink to break your glass
Yeah.
because we're clinking in the positives.
Yes.
Right?
Yeah.
And so I always encourage somebody to find a residual stream of
Okay.
income. And it can be investments. It can be dividends. It
Okay.
can be,
I was
you
just
know,
gonna ask, like, what
yes,
ways? What
dividends. Actually, when you get to a certain level in your investments, you can turn on income schedules.
Okay.
So basically, you can be paying yourself as if
Okay,
you're your
lit.
own employer, right? Another way that you can make income passively is by maybe selling drop shipping, selling a product that doesn't physically need you to be there
Yeah.
for it to go, even a service.
Yeah.
And then on the active side, it's really just being creative. It can be a part-time job.
Yeah.
COVID-19 opened up so many opportunities. COVID-19 was not great for me. I was burnt out and I had gone through so much loss, like with friends, and then George Floyd happened and it was done.
Oh, yeah,
it was done.
yeah,
I couldn't do anything. I was so burnt out. So in that case, COVID-19 was eye-opening, I think. That was the opportunity I saw, because had I not burned out in COVID,
Yeah.
I probably would be very burnt out right now. And I
Okay.
think a lot of people felt that way.
It was a great reset. That's how I look at it. to be
Exactly,
honest.
right? People left their employers. They didn't like how certain things were looking. They made big changes, big decisions. Another benefit of COVID is how easy it is to make extra streams of income.
Yeah, 100%.
Banks are now outsourcing customer service and you can do it from home.
Yeah.
Right? A lot of jobs you can just do from home. Some
Yeah.
of them start from 6 p.m. just on your laptop for a couple of hours.
Yeah.
And so you have lots of ways to make
Extra
money.
streams of income.
Absolutely.
Okay, because I feel like that's like, even my mom, we talk about, like, because she works her job, like just doing something else, and I feel like there's different options that she can look into.
Absolutely. And you want to do something that's not going to stress you out.
Yeah.
Right? Like,
Yeah.
that's why I like the idea of online. And oftentimes some people will say, okay, Ebony, when are you going to retire? Like, why do you work a job?
I never plan to retire, by the way.
Never.
No,
Ever.
Ever.
I don't.
Oh, you don't? You agree?
Yeah. I'll retire from my job.
Yeah, like hard labor.
Yeah, soon I'll
Yeah.
be retiring.
Yeah.
But in the meantime, I'm going to chill. As long as I like it
Yeah.
and it's not stressing me out, we're going to keep it, because the more the merrier.
Okay.
Right?
Yeah.
But I don't plan on ever retiring. Maybe
Yeah, me neither.
just taking a step back. And maybe this is another conversation, but like with entrepreneurship, we have to see, are we building something that always requires us? So we're just self-employed.
Exactly.
Or are we building something bigger than ourselves, a whole system that when we say, like, I'm going to beach bum in South Africa for 6 months,
Yeah.
I'm still making. The first time I made money passively, I was overspending in South Africa. So let me tell you something. I was out there and I was blowing the money. And one day I logged into my bank account. I'm like, holy, maybe we need to slow down a little bit. And then I got paid. I got paid passively. I didn't do anything. I was in South Africa and I got paid. I'm like, okay, we back to the spending now.
Oh,
right?
geez.
And so being able to have that type of control over your life, because financial independence is control over your own life.
Yes.
And so for
Yes.
people who are like, I need to retire, I want to retire, it's because you don't have control.
Yes.
Right? But when you're doing something you love, you get to step back and watch other people flourish in what you've created. You're not going to retire. Why would you?
Yeah, exactly. That's exactly why I say I'll never retire, because Black is Rich, like I said, is going to be the biggest media company out of
Absolutely.
Canada. So hopefully I'll take a step back when I'm older and watch it grow.
Exactly.
You know? So,
exactly.
Yeah. let's talk about insurances. Whether it's life insurance, property insurance, what should people be looking into?
Okay. So
I just got life insurance, by the way. I kind of embarrassed to say that, but I got it. I got it.
Okay,
I got
good.
it.
Good. My first life insurance policy I got at age 20.
Yeah. Oh man. So yours is.
Yeah.
Did you get term or the
permanent?
I got permanent too.
Yeah. Universal life or whole life? I'll explain the difference soon.
Okay. I gotta check. I'll let you look at my.
All right. So universal life versus whole life. These are two different types of permanent policies.
Okay.
One is bundled, which is the whole life. So you can't quite see what your cost of insurance is.
So mine's like half investment, half insurance.
And you can see which each is.
I'll let you look at the contract.
Okay, I think yours is universal life.
Okay.
Because with whole life, there's an investment component, but you can't necessarily see what it is. There's a guaranteed, this is at least what you'll get, and then there's a hypothetical value. That's what you could get. But you never really see month over month how much is going towards investments. There's also a participating option, right, which allows you to make dividends. So imagine in paying your insurance and being a good adult, you're getting paid dividends. Universal life is the same, but it's unbundled, which means we can see exactly what our cost of insurance is, and we can see exactly how much is going towards investment.
Okay.
Which allows us to look at an illustration and be like, okay, at this age, this is likely how much I'll have.
I think that's what I have.
I figure because he said split. I was like, okay, yeah, you can see. So universal life and whole life are two great options to creating our own banks.
Okay.
When we think about other communities, you said this the other day, and like I'm like feeling it right now, like. Is it like, are we considering that, like, you know, these communities are on year 450 and we're on year 2, right? These communities are on year 450 of insurance, of investments, of things that we couldn't own. And
it's
we're
in
on
their DNA at this point.
Exactly. Right. And so the thing is, leveraging different types of insurance is a way to protect yourself. Base level. Selfishly, it's a way to build your own bank. Because remember my earlier point, I hate when people say, this might sound harsh, so I'm sorry, but like, oh, the system's not built for us. Come on.
Yeah.
If people were not winning, if there was no black is the new rich, if we were all doing the same mediocre thing, sure, the system's against us and we should be crying.
Yeah, but
that's not the case.
Yeah, no, it's
right?
not.
And so if the system, we don't trust it, and it is against us, but you win regardless, right? Why would I put all my money in the banks?
Yeah.
What? And the thing is, that's why cryptocurrency exists. But have we noticed that now the government also has that?
Yeah.
So where do I put my money in a place where it's like, I'm set?
Yeah.
And I depend on me. Well, insurance, it's owned by an insurance company, but it disallows certain government bodies, creditors from touching your money.
Yes.
So now you become your own bank. Because if I put $1 million in my policy, I get to take loans for myself.
Yeah.
I get to leverage that for a mortgage.
Yeah.
I get to do all of these different things, and I rely on me, right? I have full control, plus I get to pass on this generational wealth. And so I call it a cheat code, because at the time that I first got my very first policy, I had trouble. I was saving.
Is it a tax sheltered one?
It's tax sheltered.
Okay. Yeah,
yes.
I got that.
So now I have 5.
You have 5 policies.
Yeah.
Jeez.
Yeah. And all in total, like 4 of them amount to $1 million. One amounts to $1 million as well, so $2 million.
Yeah.
And that last one,
now you can leverage that.
Yeah, and I plan to overfund it so that my insurance value is going to be way more than the $2 million.
Yes.
And so what this does is for our kids, right? Because my boyfriend also got an insurance policy maybe at like 23, 24. So we're already set. When we have kids, we're set for our parents, worst case scenario.
Yeah.
When we have our first child, my first course of action will be, as soon as I leave that hospital, finna write up a policy for the child, right?
Exactly.
And it's not because I'm saying, oh, I need life insurance to cover my child's life. No, I want them to build huge wealth, because that's what other communities are doing.
Yes, exactly.
Right? And so
from their born.
Yes. They don't waste time.
Yeah,
okay?
Exactly.
And so when it comes to different things, property insurance, when we think about things like health insurance, I saw Doug Ford do something like he's looking to privatize some healthcare, and people are up in arms about it.
Yeah. I like that idea.
I love it.
Yeah, I like that idea. To
Canada
be honest,
doesn't have the best healthcare.
No, it doesn't.
Just like we don't have the best Indian food. I'm even watching my grandmother
go through it. Exactly. I'm watching my grandmother go through it, and she always telling me, "It's like, Corey, if you can somehow get private healthcare, do it, please."
Absolutely.
I'm watching her go through it, and it's hard to watch sometimes.
It's hard to watch. Right now, forget people are gonna say, "Oh, well, there's long wait times." No, it's not about that. It's about the fact that stage 4 cancer here is stage 2 in Australia. That has nothing to do with a wait time.
Yeah, exactly.
That has everything to do with technology and investment.
Yeah.
Different parts of China can do surgeries that I know people couldn't be treated for here, but they were treated out there.
Exactly.
And so it's about giving yourself options. Privatized healthcare is just you going the extra step to say, I want to ensure things are good, right? It's why I have critical illness. Critical illness, if I decide I don't want to be treated here, I'll fly out.
Yeah.
That's okay.
Yeah.
And so giving ourselves those options. So you want to make sure that you protect every single dollar, right? If you invest in a property, even if you're just renting it, I want to protect everything that's in it because I paid for it.
Property insurance.
Exactly.
Everything.
So any form of insurance that's protecting your investment is worthwhile for you.
Okay.
And I know people will say, okay, like I'm gonna cut this, I'm gonna, sacrifice this. Guess what? If you have a car and it's new, my car actually has this depreciating thing. I added it so it doesn't depreciate. I'm like, lick me. You know what I'm saying? Because there's insurance. That's why we pay insurance.
Yeah.
And yes, if nothing ever happens, boo-hoo. But if something does, you're so grateful for it.
Okay.
Right? And so the only type of insurance that I would say I'm not a big fan of is mortgage insurance. And the reason for this is mortgage insurance is really life insurance perverted with a new name, right?
Okay.
And so basically you're paying more because it's called mortgage insurance, but it's really just a term life insurance policy that has the bank as your main beneficiary.
Okay.
And so when we think about building wealth, you might think, well, there's nothing wrong with that. Absolutely. Because when I'm building wealth, if I'm going to leave money for my mortgage for my kids, first off, when I'm paying for that policy, the mortgage value should be going down, right? It's a not depreciating asset, but the value is going down of how much I owe, right?
Yeah.
If this is the case, my mortgage insurance, it's always going to be for the same value. The bank is going to get paid out. If my mortgage is $600,000 today, and I pass away in 20 years, they still get paid the $600,000. My family doesn't get the overflow. Right? Whereas I can build a policy that not only pays for the mortgage, but also gives them options, right? And keeps people out of our affairs, which is the most important thing. So insurance I'm very passionate about all types of insurance for the most part, with exception to mortgage insurance, because again, it just protects the work you've put in to get what you've got.
Yes. And I want to actually drive the point in, because we're in the generation where people are getting married, they're having kids. When you have kids, immediately life insurance. I want to drive that point in because I think that's so important, because you did say other communities do that and they're used to that, but we're not, right?
But we're not. And we've gotten really good with the RESPs. RESPs.
I've heard some negative things, but
they are... An RESP, most parents think this is the only way that they can save for their child. So we go hard in this RESP. We don't realize that the fees are actually really high. And so if your child, look at the generation we're in. Do you think that 10 years ago you could have told me that people are TikTok influencers and making... No, because TikTok didn't even exist.
Exactly.
And so now kids are growing up like, I don't want to go to school. I want to be a YouTuber. Right?
And it's a real job.
It's a real job. And so the thing is, if your child decides they don't want to go to post-secondary school, you only get what you put in, less the fees. And most times the RESP, because we don't ask the right questions, they're not really well invested. So you've put in all this money, you're losing a lot of it for nothing. It's only when the child decides to go to school, the government matches, there's all of these benefits.
And things are changing, like you said.
Exactly.
Kids are not going to school.
Exactly. So I recommend, if you're going to invest in RESP, minimally, $50, $100 a month, but you don't need to be putting your entire child tax benefit. Now, if you were going to put your entire child tax benefit somewhere, in an insurance policy, let's say somebody's doing that since the baby is 0 years old, they're fresh. Child tax benefit, you're putting in, let's say, $400 a month, every single month for your child. By the time they're 18, in most illustrations, they already have $1 million, likely by the time of 25, if not before. Right? And that's just you using the child tax benefit, because people might not like me saying this, it's for the child. And so many of us are using it to fund our lives. I'm going to get my nails done, and it's for the child, right? And so I've heard somebody ask the question, like, you use it now, are you going to pay them back? Because the child tax benefit is for them, it's not for us. So why not invest it on their behalf?
Exactly. Okay, dope. So I want to talk about like building your money team, and actually I don't want to mess up the different industries, but when it comes to like financial professionals, you have a certified financial planner, insurance broker, estate planner, attorney certified, public accounting. Do we need all those, or which ones do we need?
So it just depends on who you find.
Okay.
Right? Because, for example, I can help cross off a lot of those like boats.
Yeah.
I'm not an estate planner, but I can connect you to one.
Okay,
Right. And
fair.
so oftentimes when you're working with a financial professional, they can help you in different areas.
Oh,
But
okay.
there are certain areas that we do not flirt with.
Okay.
Right. And so, for example, most financial professionals, people who are in insurance, investments,
Mm-hmm.
even financial planning, they may not be able to help you with your accounting.
Okay.
Right. Especially with different levels of business accounting. They can tell you how to use your money in terms of like, here's the excess, here's how much you can invest, here's where you can put it. But in terms of constant accounting, they're going to recommend you to somebody else. When you're managing an estate, you can have a company or a financial professional that helps you with the estate planning. So your will prep and all of that stuff.
Okay.
You go to get it notarized, but you have an executor
Yeah.
who executes that
Yes.
estate, which generally speaking comes from somebody that you know
No,
or
yeah.
that you love,
Family
right?
member. Yeah.
Also on top of this, I think that there are some things that we don't always need. My main ones are just have an accountant,
Yes.
have a lawyer, depending on what you're into, right?
Okay.
Like all entrepreneurs should be having
Yes.
some sort of lawyer.
Yeah.
And I know Courtney was just on.
Yeah.
All entrepreneurs should have some sort of lawyer.
Yeah.
You need to make sure that you have a will. So either you do have somebody to support you directly with estate planning
Yeah.
or managing your
Yeah.
estate,
Yeah.
or you have a financial professional that does that, somebody that can support you with insurance.
Okay.
And if your financial professional is not insurance licensed, then now you need to get somebody that's going to support you solely with the planning, the budgeting, the
Okay.
investing. And to me, you need a mortgage broker.
Okay.
If you're going into property, of course.
Of course.
With a mortgage broker, you likely need a real estate agent.
Okay.
Right? Somebody that you trust. Don't just get anybody because they've got a nice sign.
Yeah.
You want somebody who can talk to you hard.
I was just actually going to ask you that question. Like for the people that, let's say they're not as financially literate, what questions can you ask a professional so you can trust them so they can do services for you?
I would say sharing a client story without the name. You can always tell when you're working with the right person.
Okay.
And it's outside of financial literacy.
Yeah.
Remember that finances is purely emotional.
Okay.
So it's not just about what somebody knows because they can find things out, right? It's about how they make you feel.
Okay.
Right. And so I'm really big on that. So I had a client and her sister was like, nah, I talked to my sister. She needs to talk to you because she has all her stuff in order. I don't like the vibe, basically.
Okay.
And when I met with the sister, she was like, no way. Like there was just no push. Like I'm a very chill person. And
Yeah.
sometimes people are, remember, everything is a sale.
Yeah.
And so you need to confirm if you're being sold. And you can tell that by, okay, I've been talking to this person for 5 minutes and yet it still looks like they may not know my name. And
Just the little things.
Just the little things, right? In speaking to this person, we've gone over what they recommend. They've never once asked me what my goals are. Right? Because sometimes you're sitting in front of somebody, they have no idea who you are, and they're going to be like, here's what I recommend, get
They're
out.
just selling.
They're just selling.
You don't
And
want
so
that.
you want somebody who can take the time to listen to where you are,
Yeah.
who's not frustrated, and who's educating you. The biggest issue that we have in our community and in the financial industry is gatekeeping, right? Because you might have a financial professional that you think is kind of nice,
Yeah.
but they never give you answers. So if you were to go out in the world by yourself, you still don't know what you're doing.
Okay.
And you might have the best financial plan.
Okay.
And they do that because they need you to depend on them.
Okay.
I'm a big believer in education.
Yeah.
Shoot, don't even meet with me. Just go on my Instagram and you're
Yeah.
going to find what you need.
Yeah.
But working with me is because you want to work with me.
Yeah.
So you want the service, but I'm never going to hide the information. In fact, what I always say to my clients, I'll be like, hey, my curls might not be as tight today and that's okay. And you can go to the bank. You can go to any bank you want and be like, yeah, the curls are kind of off. So that's suspect to me, I don't mind, but I'm going to give you all the information. Reason being, it's
No
easy to
gatekeeping.
get, it's easy to get played in this industry. And I'm going to make sure that from you meet with me and from you interact with me, you're not getting played.
Okay. I like that. So when it comes to estate planning now, wills and stuff like that, how should we go about that?
Okay. So once upon a time, I learned that Staples sells for $24.99 a will kit. You can use will kits like that. I know that there's templates that you can use. I wouldn't be surprised if you could find some sort of template from Canva even. Like you can draft these things. My issue with drafting them is they don't always cover everything. I was once working with this rapper, and what I was saying is the worst thing you can do is to have succeeded in your career now and leave behind all of this wealth you're creating, all of these soundtracks, all of this stuff, all of these streams, and your family has to pay to get it.
Yeah, and you know what? Actually, God rest his soul, is Takeoff. I feel like I heard a headline in the paper saying his family's going through an estate battle.
Exactly. Probate. So let's walk through how probate works, because some people might be like, what does this all mean? Aretha Franklin had an $81 million estate.
Yeah.
She's Aretha Franklin.
Yeah.
But she ain't got no will.
No will.
If I could meet her, I wouldn't ask her how she came up with her, why you don't have a will. And so $81 million. So the process goes like this. The estate goes to an accountant.
Okay.
An accountant's going to take their fee off of this 81 million.
Yeah.
Now, I don't know about you, but if my rate was only $100 an hour today, it's going to be $1 million an hour. Right?
Yeah.
They take whatever. There's no rules, right?
Oh,
they
geez.
assign the taxes on that. This is going to go to a lawyer. The lawyer is now going to also take their fee. I'm also charging $1 million an hour.
Yeah.
And I'm going to take my time.
Yeah.
Right? Then it's going to go to the courts. The courts take their fee. And then the courts say to Aretha Franklin's family, still pay taxes on the $81 million, although we've taken our fees.
Yeah.
And you can't access her bank accounts to do so. So if Aretha didn't leave her family any of her wealth, they have to now start selling properties. They have to start trying to pay the taxes just to get the stuff back.
Wow.
It's a lengthy process.
Yeah.
Right? And so when we look at people, these are look at somebody like Nipsey Hussle.
Yes. It's my favorite.
Insurance.
Yeah.
Wills, own the rights to his stuff.
Yeah, all his
right?
music. Yeah.
This is so important. You cover this with a will.
Yeah.
And what happens is, I think of finances as a home. You've got your insurances that cover your ability to earn income. You got your pillars, which are your saving vehicles, right? And when somebody's building a new build house and you're like, I can see the sticks in the ground.
Yeah.
Nobody's looking at the foundation, the most important part. But the sticks in the ground is what we get excited about. So that's how we build our wealth. And then the house is taxes, like making sure we're not putting all of our money towards taxes.
Yeah.
And then estate planning, because you don't want to build a house and leave the roof open, right? And so you can go to a couple of different people. You can go to a lawyer for a will, and then you need to get all three documents, right? Power of attorney, the will, and healthcare directive.
Yeah.
Now, each of these costs money, but you can go to a lawyer and have them draft it. Every time you change something, you have to go to the lawyer to have them update. So let's say today I have one child. By the next 2 years, I have two. I now need to update my will, right? The other thing that you can do is, I know there's companies like Legal Shield. I work with a couple of providers as well that support you using like lawyers online to build your will. Okay. And then you might print it and get it notarized. They keep vaults and everything for you. And then last but not least, when I was just a young lad, I once wrote like my will. I was a kid. I don't know. I wrote a will on line paper. Now, does that work? It can, if it's the only thing that you have, but it can be contested. Yeah. So if we think about the people in your life that you don't want to have your money, they can contest that, and there's a chance that they'll get it. But for parents, this is where things get scarier, because wealth is wealth, and you may not be here. Some people care to leave wealth behind. Some people care to give to things, and some people don't care at all. But for people who have children, one of the scariest alliterations I'm going to use is that with children, you care for your children. Forget the wealth. If you don't have a will, your child can go to some chain smoking. Listen, you don't know who your child can go to, because it depends on who the courts decide to leave your child with. If people are deemed fit, if people are combating, let's say different sides of the family are fighting over who gets to have the child in their possession, for that interim, they likely have to go to foster care, right? And so it's like just thinking about, when I'm not here, how do I want to be remembered? How do I want those impacted by me to remember me, to access my wealth? And how do I want the government to be in my business? Because that's essentially what happens, right? They're in control of your affairs, but you've worked so hard for everything.
Jeez. So how often should we, like, if you do have a will, how often should we update our will?
Good question. So I've updated my will once since having it. And mine is more like small details, like there's a section in I have a vault, and I like to put videos in there, videos from different parts of my life, because there's a certain way I want my funeral to go. It's all white, dance hall, open bar, you know what I'm saying? Like, it is gonna be a vibe. Like, I'm gonna be in heaven, like, yes, come on, right? And it's gonna cost money. I have like what flowers I want, but I create these videos so that sometimes at a funeral,
a video you speaking.
Yeah. Just different
deep.
videos.
Yeah.
Like, here I am at this stage of my life.
Yeah.
Dear diary. Here are some videos
wow.
from like even content I've created, things that I'm really passionate about, that during that times, the hardest moment of potentially somebody else's life.
Yeah.
They have everything. It's there. It's like a montage of my life.
Jeez.
And so I do that. But updating, I would say, unless there's a significant change, right? Like, yes, you've had another child. You've amassed significant wealth that's not housed in the language in your... So, for example, if it's like all of my wealth, my stocks, my, bank accounts... You can probably slide in with that and be fine.
Okay.
But if you're saying my TD account, then now if you've now started building wealth with another institution, you probably have to name that one as well. Yeah. And so I would say just kind of keeping stock of what's in your will, potentially every 5 to 10 years. But you personally would know when you need to change it because there's been a big difference. It could be like you're married today and you can't stand your partner tomorrow. So tomorrow you change it.
Jeez.
Right. And these are also important things because some wills name ex-spouses. Right. Some wills name people who are already deceased.
Yeah.
And so we need to make sure that they're current based on where we are in life, who we're with in life, how many children we have, and what our goals are as well.
Okay. Wow. That's a lot of information. Thank you. So I ask every guest the same 2 questions at the end. And the first one, I want to know the best advice you received and the worst advice you received. And you don't have to say any names.
The best advice I received was on my staircase in Brampton. When my aunt, it didn't come in the form of advice, but she looked at me and she said, I don't know why you want to be a lawyer. You're too good.
Elaborate. What does she mean?
She left that there, and I looked up and I took it as like, you're just filled with too much to just be a lawyer. Don't get me wrong. I love my Courtneys, right?
Yeah.
But like, what she was saying was inside of me, there was so much like gift. I'm very entrepreneurial. I like to speak. And she was just saying, don't limit yourself. And I think that was the first moment. I still go to family events where people are like, are you sure you don't want to be a lawyer? I'm like, dude, like it's been like 10 years. It's done. I'm not going. Right? I have people who say this is still the worst decision I've made.
Really?
And
to this day?
To this day.
Really?
Yeah. I've gone places and been like, meet my cousin's friends and like, so I heard you were supposed to be a lawyer. And I'm like, holy, people still talking about that.
Jeez. But look at all that you're doing.
Trust me. Did you hear how much I make a minute? How about that? Why don't we talk about that? We don't talk about law school. Right? So that opened my eyes. That was right before I started traveling too. Like that was a big moment for me to realize I'm not average. And it was also a moment for me to think about why did I even want to be a lawyer? And I realized wanting to be a lawyer was because I liked the way people reacted when I said, so smart, you're going to be a lawyer.
Yeah. The validation.
The validation. It made me feel special, and lawyers are special. But I know that I do so much more now for my community than I could have done as a lawyer.
100%.
The worst advice... The worst advice I think I've received is just be realistic.
Oh, we got that one the other day too.
Just be realistic. Yeah.
She said that.
Yeah. Being realistic is a killer of dreams. And I think sometimes you don't realize that your dreams are slipping away because we're so focused on the mundane that we're not thinking about what dreams are. Most Canadians don't dream anymore.
Yeah, I know, because I feel like we're too privileged. Like we're at a privilege that paralyzes us.
Exactly.
That's what I notice about Canadians, to be honest.
We don't. Sometimes I say things, and the other day I was talking to my partner, Marjan, and he was saying like, sometimes you go in with these goals, and he's like, for us, I know that they're real, but like, he's like, do you feel like some people get intimidated by that? Like when you say that you're going to get the jet, and I say, nah, because the thing is, our dreams are so big that if it makes you feel uncomfortable, I want you to own that. Right? Because there's no reason that we can't do anything. Like in COVID-19, I was going through some things, man. And there were so much things. I'm not into politics, but anyways, there were things that I would not do, and I was not going to change my views about myself and certain things. And somebody said to me like, "Oh, come on, fam! Like, if you want to travel, like you got to do this, this, and this, and otherwise you'll never be able to travel again."
Come on.
I said, "Fam,
I didn't take
I'm
that.
finna charter a jet."
Come on.
So you sure you're gonna charter a jet? It's not that much more expensive than first class these days. You know, and it's like changing your mind. How far are you willing to be pushed because you're too scared to make decisions tied to your wallet? So I'm really big on, I don't shrink realism to, you know, oh, I'm not going to dream because I can't afford it. No, I'm going to increase my wallet size to fit my wildest dreams. And that's what I believe in. I help people dream wildly. Like, amazing. I talked to somebody who was like, I want to own a ranch, a winery. I want to own horses. I'm like, yeah, do it. And invite me over. It's about not being realistic sometimes, because not being realistic is what allows you to think of the crazy things that make you wildly rich.
And I feel like, you know, as we grow older, a lot of people, they get away from their inner child. Like, look how many dreams that we had as a child. We want to be Superman. We want to be this person. We want to be that person. And as we get older, we listen to people tell us, oh, you can't do that. You can't do that. And it kind of kills us as human beings.
Yeah, it's the, what do they call it? It's like the disease of no's. I heard somebody say, like, I don't believe our community has a crime problem. That's my first thing. I hate when people say, oh, the Black community has so much crime. Everywhere has crime. And crimes are a form of entrepreneurship in some way, right? It's like people just trying to get to the goal. We have a mindset problem. And that mindset usually comes from no's, because people that are doing all the foolishness that they're doing now, oftentimes it comes from the fact that every time they asked for something, their parents were saying no. They couldn't afford it. They couldn't do it. They couldn't even spend time with those kids because they're too busy working doubles, triples, overnights, all of this crazy stuff. And so it comes back down to saying no less, especially for the parents on the call. Like, my kids are going to be the richest broke kids ever. Like, you know, I'm going to make sure that they work for certain things. They'll buy their first car.
100%.
All while we have the money, because I also believe in not being spoiled. Right? But at the same time, my kids will never have to beg for nothing. Unless they're unruly, then they'll have to beg. Right? But like, no, we have to start saying no to no sometimes. And just start saying yes to our best lives, to a break, to giving our kids an experience that doesn't make them want after anything. Our kids right now are looking at other people's lives like, shoot, again, like, I want to go to Disneyland. I want to do this. And if you build, you have two types of kids. They grow up and they're like, I don't want to want any longer. I'm going to get it. Or I want it so bad, I'm going to find the easiest way to try.
I like that. I like that. Okay. And last question. On the show, we like to make predictions. So in 5 years, I want to say, Eboni, she did say she was going to do that. Where do you see yourself in 5 years?
Oh, I see myself in a lot of places I could cry.
In a jet. That's one. Yeah, the boat for sure.
The boat for sure.
Okay.
The boat's for 4 or 5 years.
Okay, bet.
I would say some goals that we've set is we really want to make some big investments in the community in a big way.
Okay.
So in 5 years, outside of my financial goals, I would say that I see myself... Honestly, I see myself on, like, not regular news, but like news, like, you know, just doing big things, articles, the real, you know, like some different things. But most importantly, in the next 5 years, I will cross over my second million.
Okay, lit.
Yeah, in the next 5 years, that I'll be a millionaire. Okay. And in the next 5 years, ideally, I'll be retired from my 9 to 5. Okay. Maybe one child, you know. These are the small things, but like, I just plan to be big. Like, you'll see my face on a billboard or on TV, and not just CP, not just City Line. I don't want no City Line. Everywhere.
Yeah. Okay. Dope. That's kind of where Black is Rich. That's what we want to do. Is I want to be everywhere. Yes. Like in the household, billboards, on the bus stops or whatever. That's exactly where we want to take this in like 5 years, because I think I can.
And then you'll have the Black is the New Rich jet.
Yeah, no, 100%. Yeah, 100%. There you go. Black is the New Rich. Why not?
Yes.
Right? Okay, dope. Can you let people know how they can contact you and how to reach you?
Okay, so how you can contact me is I'm really big on Instagram right now. I was just talking to Corey about it. I'm kind of on TikTok, getting more consistent.
I need to see more content for sure.
Yes. But you can find me on all social platforms at Eboni, EBONI.ELLE. There's an underscore Ebony.ELLE. And then my website is ebonyl.com.
Nice.
I'm fully available. Once you get to my social media outlets, you can find my website, my email, DM me for questions. I'm not a gatekeeper.
Yes.
So from you DM me and I see your message, I will answer all of your questions and all of my content. I have blogs, I have an email list, all of this stuff to give everybody all that they need to know.
Okay, amazing. Well, I want to thank you for coming out here because I know it's a little bit of a far drive. Jeez, this was a packed conversation, and I just want to let you know anytime that you want to come back, if you have new information, you're welcome.
Thank you. Thank you so much for having me, and thank you for all that you're doing with Black is the New Rich, because you will change. You'll create like really big change for the community.
Thank you.
You will be on billboards. You'll be on buses. You'll have the jet. I'm gonna be on it too.
All right.
But like you're doing big things, and I think that I wanted to take some time to take my hat off to you, because this can be a scary thing. Honing in and just delivering for the community and waking up and having the community be your first priority.
100%.
Always delivering value, always searching for value.
Yeah.
Soon going to be doing speaking engagements. But yeah, like big ups to you for everything that you're doing. And
thank you.
I'll definitely want to be back.
Okay, lit. All right, lit. Episode 52. That's it. How'd you like it?
I loved it.
Jeez, thank you.
Everything black on black. If I studied that facts on facts.